Good morning students, welcome back to my channel. So today I'm going to discuss some of the very basic accounting terms, okay, from HS first year AHSEC syllabus. Okay, it is part A, financial accounting, unit number 1, introduction to accounting. So these are the basic accounting terms: account, debit, credit, entity, asset, liability, capital, expense, income, expenditure, revenue, debtors, creditors, goods, cost, gain, stock, purchases, sales, loss, profit, voucher, then discount, trade discount and cash discount, then transaction, drawings, revenue items and capital items. So see here, I have discussed in detail that what is an account. Okay, my language is very easy. Okay, I have explained very nicely, okay, in my own words. Okay, so just read them. Okay, you will come to know what is an account, what is debit. Then you see here what is credit. Okay, then what is an entity? Asset. Asset means property of a person, company, etc. Okay, and it has its own value. Land, building, etc. is the example. Liability: when a business owes means payable money to a third party, it is known as liability of the business. Example: credit, purchase of goods. Then capital. Okay, capital means the amount of money used to start a business is called capital. Expense, you know. What is income? You know. Expenditure is the act of spending money, is called expenditure. Revenue is the total income generated from the sale of goods or services. Okay. Then you see what is a debtor. Okay, so see here, debtor is an individual or company to whom goods are sold on credit. Debtors are assets of a business. So anything, any amount of money a business is going to receive, okay, from a person, okay, or you can say individual or company, okay, will be termed as debtor. Okay, or the business is going to receive cash. Okay, it may be for goods sold on credit, or the business is going to receive money from any other party, okay, in cash. So that party or that company becomes a debtor for the business. And creditor means, okay, suppose the business has to pay money, okay, to an individual or company, okay, for goods purchased on credit, okay, or for any other activity the business has to pay money, okay, to some other party, okay, individual or company. So that party becomes a creditor for the business. Got it? So that is said in debtor and creditor. Debtors are assets, creditors are liability of a business. You see the meaning of goods: cost, gain, stock, purchases, sales, then loss. Okay, loss means cost price greater than selling price of goods is loss. Then you see here profit. Profit means cost price less than selling price. Okay, it's profit. Voucher, you see, it's a documentary evidence of a financial transaction. Whenever there is a financial transaction taken place in a business, okay, voucher stands as a documentary evidence for receipt and payment of money. Discount, trade discount and cash discount, you can check out my last videos, okay, my previous videos. There I have very elaborately explained what is a trade discount and cash discount. Trade discount means it is allowed on the list price of the goods sold, list price or catalog price. And cash discount means it is allowed, okay, to the cash discount means it is allowed to the customers, okay, by the suppliers. Suppose the for quick receipt of money. Okay, suppose the supplier has sold goods to its customers. Now the customers cannot pay, okay, cash immediately. Okay, so in order to receive cash immediately, okay, by the supplier has allowed some percentage of discount to the customer. So that is a cash discount. Okay, it is shown in the books of account, cash discount. Trade discount is not shown in the books of account. Got it? Then you see what is a transaction. Drawings, it is the amount of money withdrawn by a partner for his personal use. Revenue items are what? Rent received, interest received. It's a short term. Okay, revenue items are for short term and it relates to day-to-day operations of the business. Okay, while operating the business, okay, if rent is received, interest is received, that is revenue item of small amounts. Capital items are of huge amounts. Okay, it's long-term investments and is required for purchase of assets or improvements like purchase of machinery, building construction, etc. Okay, so hope you have understood the few basic accounting terms. Okay, just first year students, if you like my video, please subscribe to my channel. Thank you for today.